All right, guys and gals, back to work here tonight. FOMC's over. Time to get back. We're getting ready for tomorrow. Tomorrow's the last day of the month. It's Wednesday evening after all. It's April 29th, 2020. My name is Joseph, and welcome back to your nightly newsletter. Now, if you're here for the first time, it's great to have you with me because my job tonight is to help us find the best entry setups for tomorrow's trading session. And I got a jam-packed video in store for you tonight. The charts are already in the background. As you can see, we got some oil, some S&P, and some gold. Had some big moves, had some disappointing moves, and we got a bunch of ranges, got a bunch of trends. I'm going to break down the entire plan I have for tomorrow's trading session. Speaking of tomorrow, too, I want to check the calendar for tomorrow. Got some big news on the schedule. We've also got some rumors circulating about some deals coming up tomorrow. I want to make sure you're aware of that. And of course, we get the end of the month to get ready for tomorrow as well. So a jam-packed video newsletter for you guys. Charts are ready. Calendar is ready. Glad to see you're ready here with me. Before we jump in tonight, though, I want to make sure to remind you, make sure you subscribe to this YouTube channel. If you have not subscribed yet, hit that subscribe button. I don't want you to miss all the good stuff we publish every evening on this video. And don't forget, if you have any questions about anything we talk about tonight, drop those questions in the comment section below. I'll circle back after we publish the video tonight and answer all those questions. And as always, boy, I really appreciate you tuning in every evening. If you tune in every evening, if this newsletter is an important part of your day, hit that thumbs up button for me. Always appreciate you guys participating with me every evening on this nightly newsletter. So thank you so much for being here. Grab the subscribe button, hit that thumbs up, and drop those questions down below if you need any help along the way. All right, let's not waste any more valuable time. Kicking off the video tonight, let's check the calendar for tomorrow. Got a bunch of news tomorrow morning. Check the economic news calendar here, courtesy of Econo Day. Tomorrow, of course, is Thursday. It's the end of the month tomorrow. We know the end of the month is usually going to be filled with more volatility. So we do expect to see an increase in volatility here tomorrow. We've got some news on the schedule, as you can see. We got some jobless claims and personal income tomorrow at 8:30 Eastern time. Now, I don't think that personal income is going to be that big of a market mover, but you know, those jobless claims, right? We've had like a gajillion unemployment claims. People are really tracking those numbers closely right now, and we have seen that jobless claims number. It hasn't been for a while, but the last couple of weeks, right, that jobless claims number has really been a market mover. So again, historically it hasn't been, but over the last 4 or 5 weeks here, ever since the lockdown occurred, at least here in the United States, that jobless claims number, I think it was like 24 or 30 million people have applied for these jobless claims. People are tracking that, so that is definitely something I'm watching for tomorrow. That is a scheduled report at 8:30 Eastern time. There's also a bunch of stuff, though, tomorrow that we're starting to hear some rumors about, or, whether you want to call them rumors. First of all, we have a lot of optimism in the market right now. What appears to be very blind optimism right now. We felt it today on oil. We felt it today, of course, on the S&P. Was a bit disappointed that we didn't see gold respond as I was anticipating it. But hey, 2 out of 3 ain't bad, as they say. But optimism, though, about the reopening of the economy, and most importantly, optimism about this vaccine. We saw some headlines today, the Gilead, I forget what the technical term for it is, but this vaccine apparently starting to show some promising signs as they do more tests. We'll see if that continues, but it definitely appears to be, right, a boon for the markets right now. Optimism is definitely starting to show up in these markets. We also have a whiff of a trade or deal right now for the oil companies here in the U.S. Last week, we heard from the U.S. President Trump. He was talking about how they'll never let the oil workers go. They'll never let them, basically kind of alluded to, right, they'd be there to help out the oil industry. A couple hours ago, though, I saw a headline come across the news data talking about the fact that the U.S. President Trump was just briefed on a new oil deal. That might be the most exciting thing as we go into a post-FOMC. So definitely going to be watching a lot of oil. Obviously, we watch oil every day in our trade room. But that is an interesting thing, development we're watching here as we go into tomorrow. tomorrow. So optimism, right, with the vaccine, optimism for the reopening of the economy, and that oil deal are definitely things we're watching here for tomorrow, in addition to, right, those jobless claims. Now, of course, tomorrow is also what we call Tech Thursday. Got a bunch of technology companies posting earnings both before the open and after the close. So NASDAQ traders out there, we got Twitter, Apple, Amazon, Visa. I mean, we have a ton of technology names tomorrow. Also got McDonald's, right? Gilead, that same company that has the vaccine, they're reporting tomorrow as well. So really a lot of tech companies. If you're a NASDAQ trader, definitely be aware of that for tomorrow. And that NASDAQ, even though I prefer personally the S&P over the NASDAQ, if the NASDAQ rallies or collapses tomorrow on some poor or overperforming news earnings reports, that may drag the S&P along with it. So I think tomorrow, with tomorrow having a lot of earnings, I think we may see the S&P kind of shadow that NASDAQ. So really oil is looking very active for tomorrow and Friday with this oil deal kind of on the desk of the U.S. president. And with all that tech earnings, obviously moving the NASDAQ, but don't be surprised if the S&P 500 also follows suit as well. So we'll be watching those two markets pretty closely tomorrow. We'll talk about gold as well here on the charts tonight because it was a bit of a dog, right? If you watch today, it didn't move very much today, but something tells me this is the calm before the storm on the gold. Now, guys, don't forget, tomorrow morning, every morning, we'll be in our trade room, 8 o'clock Eastern time. I would love to have you come out and trade the entire strategy with us every morning at the opening bell. I'll put all the information about membership and how to get into our trade room down in the description of this YouTube video. We trade together every morning at 8 o'clock Eastern time, but you got to be a member and get that information in the description of that video. All right, let's keep going here, though. Let's push into some charts here tonight. We get some oil. Got some S&P, obviously, and we can't forget about, right, that yellow metal, the gold futures, the dog, right, from today. That's all right. Got a bunch of clues on gold tonight. I'm going to jump first, though, I think, into the S&P. The S&P, of course, I think what everyone is talking about here, post FOMC. And I'll tell you, as I'm recording this video right now at, 5:30 on a Wednesday evening, 5:30 Eastern time, that is. I live in Los Angeles. This is Eastern time. It's still pretty early here in Los Angeles. But it looks like that optimism I was talking about earlier, that optimism is certainly showing up because we may not be right at the high, but we are closing an inch or two off that high. Anytime you see a market closing the session right at the high print of the day, you know there is a bunch of FOMO, you know there's a bunch of optimism in this market. So we definitely know the market is bullish. More importantly, I think what is more importantly is there's an exclamation point on the end of that bullish, right? Because that strong spike, this is not just, it's a very strong spike, right? Anytime we see a strong move in one direction, we know the odds are pretty good we're going to get another leg, right? So we know those. This is definitely not the time to be trying to call a top on this move. A very strong bull run into the close. So a bull market with an exclamation, right, on the end. And really what this tells me is the buyers have full control. I want to be a buyer at support, ideally. And you notice I've got a couple support levels I've marked up here at the low of this channel. That would be great to be a buyer off of, right? I got a beautiful little kind of hidden support trend line down here. That would be a great place to be a buy off of. But let's be honest here for a second. This market is finishing, right? They're finishing the job with a slam dunk into the close here. It might be a pipe dream. I might be fantasizing about getting that pullback right now. We just may not get that pullback. And so because of that aggressiveness into the close, and again, like I said earlier, the fundamentals, the optimism in this market right now, and with the NASDAQ earnings tomorrow, that may also be, again, may not be a boon for us, but it may, right, really affect this market as well. I want to start thinking about what if this market doesn't pull back here for me in the overnight? What's my options here as we go higher? So I want to be a buyer. I'd like to buy at support, but, again, with all the optimism, I just don't know if we're going to get that really deep pullback we have here. So as I look at this, if I want to be a buyer on the S&P, the big thing is before you plan your entry, you got to plan your exit. Before you want to get in, you got to know where you're getting out. And I can see here 1, 2, 3, and this would be 4 legs higher here. Now, keep in mind, we saw, I want to put like an asterisk on this comment. Usually we go 4 legs. We're not going much further. Usually a market goes 4 legs. We're not going much further. And usually what happens is a 4-legged move will usually end up going sideways here, right? That's what's most common around a 4-legged move, especially a 4-legged move that finishes off the day today right at its highs. Now, again, like I said earlier, I'm going to put an asterisk next to that because you got to remember the market just collapsed, right, just a few weeks ago. So the fear of missing out, the buy everything type of attitude may come into these markets again. So they may laugh. These buyers may laugh at that quad measured move, and we may see this market really take off up to that 3,000, or maybe even if we keep going higher here, there's some levels up overhead we'll talk about later on in the video. So we know we have potential for just a very strong velocity move going higher, even though we're already 4 legs up. So we'll talk about that as well. I think the big thing right now is how do we structure this to make sure I'm not buying into that area of resistance, but at the same time though, if the market still wants to go higher, what are some options for me in the short term? There are really 3 things I'm planning for here as we go higher. The first one is always going to be that 2-try trap. The 2-try trap pattern before we get up to that measured move. So if we open up in Asia and the market continues to rally higher here, as long as I can get a little trap low on this, and remember the pattern is pretty simple. We go up, we see a shallow pullback, and that shallow pullback makes a higher high. Once I see that shallow pullback and that higher high, now I know everyone's waiting below that low, and I can buy with that 2-try trap. Now, I'd like to get that before we get to the measured move. If we do get to that quad measured move, I definitely want to keep my eyes open for a range up here, because a range will definitely be, again, like I said, likely in most situations. Once we get to that measured move, watch out for that sideways movement. What will happen eventually is the buyers will run out of bullets, as we say, and you'll get that pullback off the high. Once you get that pullback, as long as we have that range going sideways, that'll be a magnet, right? So once that range forms, that range starts to become a magnet, and once we get this pullback, what'll happen is you'll see a lot of top pickers. They'll come in trying to sell that pullback, right? Breakout pullbacks are some of the favorites of rookies. Rookies keep their stops very tight. They can't defend themselves when they're wrong. And one of the easiest ways to make a profit off a range market in a bull environment like this is to simply wait for that pullback, that breakout, wait for those bears to come in and try to sell off that moving average. And again, rookie traders, inexperienced traders, too aggressive traders, they get caught making those poor decisions all the time. And I want to make sure you're there to catch them, right? Make sure you get the money in your account instead of in their account. So of course, that's called a failure pattern. It's basically a seller failure underneath the low of that trading range. Now, another thing I'm watching for is another leg higher. Like I said earlier, they may blow right through this measured move. If they really take off to the upside, we know probably where they're trying to go. They're trying to get that 3,000 big round number. So if we do see it go up, right, we see it blast right through that measured move. Okay, perfect. That's the green light now. We know where their next objective is at that 3,000, and now we're marking up the high, we're marking up that low, and we're buying the pullback off that new, what I call a hidden channel. This would be kind of like a breakout pattern, right? Kind of like a 1, 2, 3 breakout into a hidden channel pullback. So those are some definite patterns I'm watching for as the market goes higher. And don't forget, we're going to trade all of these together every morning in our trade room. Like I mentioned earlier, you can find all the membership information in the description of the video. But if you're not with me in the trade room every morning, the next best thing is to grab our free trading course in the upper right hand corner. I'll put a link up there. It'll pop up for you. Grab the free course, learn all about these setups. In fact, I'll send you hundreds of examples of how we apply those setups to our favorite futures markets. So again, learning patterns, right? Like the two-try trap, learning how to trade these range-bound markets with failure patterns, and learning how to use a 1, 2, 3 breakout into a hidden channel pullback. All of that stuff will be covered right inside of that free trading course. And again, I'll put all the important links for you guys in the description of that YouTube video. So we know what the plan is if the market runs higher. I also want to just kind of remind you that at any point here, if this market goes sideways, it doesn't need to go much higher. You know, it may decide here, okay, we're done right here where it is, or we may end up pulling back into that triple measured move, right? We may end up coming down and we might start going sideways here. You know what I'm saying? That happens a lot as well. We kind of poke our heads through the triple measured move. You remember, triple measured moves are no slouch. Triple measured moves, a three-legged move, right, which we just saw, those are usually about as far as the market goes. When the market's really strong like this, 4 legs are expected. But again, usually after 4 legs, we're about as far as it's going to go on that point. And again, with this situation right now, there's no way to call a top on this, right? You'd be foolish to try calling tops in this market right now because of all the potential FOMO in this market. So be aware of a range here tomorrow. If we do have a range start forming sideways, we know we're bullish. We want to be buying underneath that range. And what's the best way to buy in a range-bound market? Wait for the pullback. Wait for that seller failure pattern and buy right into those stop losses of those counter trend breakout pullback sellers, right? That's another option we're watching for here tomorrow. Now, another pattern we're watching for here would be if we can continue this rotation. You know, I've got this channel marked up here, as you can see. I'm not, and again, I'm not quite sure if they're going to even care about that channel, right? They may not. They may go right on through it once we open up here. But if I can get a pullback down to the low of that channel, I can look for one of my favorite combination setups, which is basically a seller failure off the EMA into a bullish pullback right off the EMA. You can see a great example of that right here where we have that move up, we pull back. You can see how the bears come in, they try to sell off the moving average right there. The market fails to go lower, right? And there's that, again, I call this a failure into pullback combination. What happens is we get below the moving average, the sellers try to sell the pullback. They're on the wrong side of this market. They're at the wrong location to be selling, right? They're doing it right into support. And that's why this pattern is so reliable. You know, that seller failure, when you get them off the low of these channels, they become very, very reliable patterns. And then, of course, they oftentimes pull right back into that moving average, right? And that's, again, kind of a combination we see a lot in our trade room. Seller failure into a bullish pullback. Now, at the same time, I mentioned earlier that I've got some other levels of support down here, right? The 29.29. I really would love to get that deeper pullback down to that trend line. I've even got, I mean, you know, it doesn't seem realistic right now, but I've even got this reversal line over here. This guy might be a bit lonely here for a while. 29.13.5 here. You know, in a perfect world, we'll get that nice deep pullback, right, with all that beautiful risk to reward ratio. But, you know, again, I worry all the FOMO buyers right now, all the buy everything bulls in this market because people think we're going back to all-time highs again. I worry that's going to spoil that deep pullback for us. But if we do get that really deep pullback, pullback here, which is what everybody wants to get here tomorrow. There are two types of deep pullbacks I would recommend, or I'll be watching for tomorrow. One is a two-legged pullback. So for example, if we get a pullback, bounces and goes lower here, I'm going to draw the trend line off the high, and I'll use that trend line now as a key level of support on the opposite side. I call these two-legged pullbacks, right? Two-legged pullback pattern, one of my favorites in a nice deep pullback off that high. If we don't, right, let's just say it just kind of slides lower here, down into kind of this secondary area here. It may not go all the way down to that trend line, so just be aware. I think what I really want is I want to get down underneath the channel, get into this area here, really give me a nice deep pullback, make these sellers, this is the key, make the sellers think, oh, we've reversed, right? We're going back to 2,900. Make those bears come in and give it one shot, give it two shots. Once I've got, remember, what I want to do is I want to wait for those deep pullbacks. I want to get them deep enough so the counter trend traders, the sellers in this example, they think this market's reversed. And so what they're going to do is they're going to throw the kitchen sink at it. Right? They'll throw once, they'll try twice. Once you've got those bears with their own grave being dug, now you know exactly where those stops are, and it's a pretty easy setup. You buy right into those, right, stop losses. Now, a lot of times that deep pullback, when those bears get out, it just rips, and it rips higher. So you might not get that. You might not get that failure into pullback combination, which we talked about a moment ago. You might not get that. What we oftentimes see, though, is we oftentimes see it rip higher. The moving average comes over. We get that shallow pullback, that higher high. Remember that pattern again? It was called the two-try trap pattern. So that will be another scenario I'm watching for. You know, think of it this way. When you get those deep, deep pullbacks, that rubber band gets pulled all the way back, and that's what causes it. When the bears get stopped out, it rips higher, right? And then, of course, you don't want to chase after it. Look for those traps before we get back up, right, to retest those highs. So a bunch of different options here for the buyers. And again, I cover most of those patterns talked about, right, inside of that free trading course. I think you'll really like it. Now, how can I be a seller right now? I know, I almost feel bad even saying the word seller. It's almost unpatriotic if I can take a flash back in time, right? But how would I sell this market right now? Well, one option would be is a crown reversal. And what I would do is I wouldn't look for the reversal until I really started to see some resistance start to hold here. For example, let's say we do go up to that quad measured move, a very big level of resistance. Look for the buyers to try once, pull back, try twice, and then look for that trap high. We call these crown reversals. Now, just like I always want to buy at a level of support in a bull market, I always want to sell at a level of resistance in a bear market, or in this case, right, in a bull market. So it's really important to me that I get that resistance level incorporated here and then get that crown reversal. And again, think about it. What you're doing is you're letting the buyers completely exhaust. Right, you're letting them try once, try twice. They're throwing everything they've got, and then it dumps on top of them, right? That's the crown reversal pattern that we love. Now, again, I would also say too is that if we come back down in and 1 and 2, right, that would be another way to do it, but you know, that will really be depending on, do we pull back? Do we actually see it respect that triple? That's going to be an important part as well. There's some different ways to pick the top on this. Be careful, though, you top pickers out there. Be careful out here right now. This market could easily just rip higher here for a couple days, just like it collapsed for a couple days when this whole thing started. Now, what is most reliable for a sell is to actually get a reversal. So we talked about deep pullbacks. So a deep pullback, in my experience, is not good enough to get a reversal. You've got to have those bears hold that pullback and jump. If they can get that jump off the moving average, that's the key. right? Because you probably have noticed these buyers, they are gobbling everything up. If it goes below that moving average right now, the buyers are buying it, right? And they're buying it quickly. There's very little space, you'll notice, underneath that moving average. The buyers are very aggressive at this point. Now, that may change, right? Anything can change quickly here right now, especially in these market conditions. But the most important thing is you got to see that strong move off the moving average. I just don't trust that pullback for obvious reasons. We've already seen them fail too many times. So once I get that 1, 2, 3 reversal, then what I can do is I can pop off that low, I can find that new hidden channel, and now I can be a seller off the high of that hidden channel. Now, boy, I'll tell you, there's a lot of downside here available. And like I said before, look at that big move down. There's a lot of downside here available if these bears can get their grip on this thing. And again, like I said earlier, that NASDAQ tomorrow, right? The NASDAQ might just be the big variable that could sink this ship. We'll see. We got to wait and see what those earnings reports look like. Again, Twitter, Apple, Amazon. We all know Amazon. We all know Amazon can report bad earnings. If they report bad earnings tomorrow, I will eat my shoe because I've been living off Amazon for the past 4 or 5 weeks. I'm sure you have as well, right? I can't imagine these tech names are going to get some bad news tomorrow. But hey, you know what? I'm not an expert on that. We'll wait for the data to tell us. All right, we're looking good on the S&P. I think we have everything that we need here. Let's keep going here. How about some oil? I heard folks talk about the oil markets, the black gold, the Texas tea. Let's grab some oil here right now. Now, again, as I mentioned earlier, we've got that bit of a rumor. Well, you know how the U.S. President Trump likes to work, right? He likes to float those little rumors out there, whether or not that deal will come through. But I mean, as I was just getting ready to record this, we saw the headline that again, a week ago we heard about we won't let the U.S. oil workers down, right? A few hours ago we hear about this potential oil deal that's floating around the White House right now. Will the oil futures get a whiff of this, right? Will the buy everything bulls right now, will they get a whiff of that as well? That may be some really good information to be aware of, because we've got a lot of open space in both directions right now. If I grab a little bit wider picture on this, the most important thing is we got that gap overhead, got that range, as I say, at 17. That would be an easy area to get all the way back up and retest those highs. If these buyers can really keep this thing going. At the same time, though, that $12 a barrel area that was so sticky earlier on this week, that is another easy magnet here for us as well. So we've got a couple spots here above and below that I think are really going to be easy to latch onto for buyers or for sellers. What do we know about the oil market? We know we're bullish. There's no doubt about that right now. Buyers have control. I want to be a buyer at a support level. I can also see here, I've got a bunch of good support. I love this hidden channel we've got drawn up off this low, right? Love that hidden channel. Nice spot to be a buyer off of that low. I'll be honest, I wish we had a little bit deeper pullback than we have right now. I'd like to get down to that reversal line at around 14. I really was hoping we'd get this battle zone at 1476 to get hit, right? It's just below the low of that channel. So that's definitely something I'm watching for as well, and that will play into my analysis here for tomorrow. If we hear about this oil deal, the market could rip higher, and so I want to make sure I'm ready for that with a couple good setups to both avoid buying high, but to also make sure prepared if we do get that measured move, because as you can see, right, one leg up, two legs up, 3 legs up. These are pretty big legs. We saw the S&P flirting with a 4-legged move. We may end up seeing this crude oil market get its own triple measured move as well. That's definitely something that could easily be hit, right? And then if they keep on going, if this thing really rips, that $20 a barrel, that probably the juiciest, besides zero, right? Probably the juiciest of all of the big round numbers. If we go higher here, so I want to make sure I'm ready for a deeper pullback. I want to make sure I'm ready for the market ripping higher. I'll also make sure I'm ready for a possible range here tomorrow because, anytime a market makes these types of big moves in one session, we always know there's potential for a trading range. So what are some options here as we go? Let's pretend for a moment. Let's say for a moment now the market opens up right now and the wind gets out, right? This deal is coming soon. Here are a couple options here I'm watching for. If this market, let me zoom in a bit closer here. If this market races higher on us here in the overnight, one pattern obviously is that strong move up, that shallow pullback, that higher high, and that two-try trap. Now, remember, this requires a strong move first, right? You want to see a strong impulse move, and you'll feel it, right? You'll feel that strength. It'll pop. Every red candle will get gobbled right up, right? And you'll know this is a strong impulse move. Watch that shallow pullback. The shallow pullback is the giveaway. When you get that shallow pullback followed by the higher high, it's usually just a little bit higher high, and then, of course, you want to hit it with that trap low. I call that a two-try trap pattern. Another pattern I'm watching if the market rips higher is a 1, 2, 3 breakout or a 1, 2, 3 momentum move in this case. I'm worried. I don't want to buy aggressively right up here because for all I know, we're buying right into that high. If I can get that two-try trap, it's worth it. But if we just poke our heads back to the high here, though, I can't really latch onto that without getting really aggressive and getting into an unreliable trade. So what I'll do is I'll wait for that 1, 2, 3 breakout, 1, 2, 3 momentum moves, we'll call it on this one. It's not much of a breakout. By the way, this is the same thing we look for a reversal, right? 1, 2, 3 reversal. Once I have that 1, 2, 3 move, mark that high, mark that low, and now you know exactly where you want to be a buyer. It's a much more reliable buy than to buy that first one. You're more than welcome to buy the first one, but you better wear a helmet and a mouth guard because it's probably, it could work. For all I know, it could work. The problem, though, is it's not going to be overall. If you get in the habit of buying that first pullback, it's going to be about a 50-50 win on you, right? It's not going to be a very reliable setup in the long run. I'd much rather wait for that 1, 2, 3 momentum move and then buy the first pullback off the low of that hidden channel. Target, again, is up around that measured move. And if you wanted to leave that runner up to 20 tomorrow, that wouldn't be a bad idea either, right? If we saw that 1, 2, 3 move higher here, wouldn't be a bad idea to take a quick target on it and try to leave that, float that runner, up until that $20 a barrel tomorrow. Not a bad idea if you got the account size to leave that runner. So now that we know how the market wants to go higher here, I'm also keeping an eye on a possible range on this. I really don't like the way the market went up and kind of came right back down. The S&P we saw kind of finished the day right at the highs, kind of spiking the football right at the end of the day. The oil market is definitely not that, is it? It definitely isn't it? So there may be this little sneaky little, right? That little range right there might be there. And so if we start going sideways here in the overnight, this is where you're going to have to kind of bear with me here. I can't know everything in the future. I've been doing this for a long time and I can anticipate quite a bit. But if we start going sideways, once we know where that range is, I'm going to mark up the amount of the move above it and then the amount of the move below it. And this is where we may be able to get that $14 area. That may be our best friend here. That now becomes my key support. Right? The amount of the move above becomes the amount of the move below. Now remember, we're still bullish at this point, right? So when I get this move going lower here, what's my favorite pattern in a range environment? They're failure patterns. And basically what you're doing is you're waiting for, right? You're waiting for those breakout sellers. You're waiting for those bears now to get short off the moving average, and we're simply buying into those stop losses. Again, I'm trying to combine what we call the pendulum swing, right? Above the range, below the range, and making sure we incorporate that support level with the entry setup to buy into it, right? Those poor sellers selling into an area of support and selling in a bull market. That is definitely something I'm watching for here tomorrow. So another option would be, as we go lower here, right? Let's just say, for example, we go up, we come back down. What's going to happen now is all those bears that are trying to sell up here, right? Their stops will be right up over that head. Very simple seller failure pattern in the short term. Strong move up, pull back below the moving average. Sellers come in, they try to sell off the EMA. We know exactly where their stops are, and we're buying into stops. We're buying into pullbacks, right? That classic seller failure into bullish pullback scenario. We see these all the time, right? Strong move up, pull back below the moving average. Bears try to get short off the EMA. They fail. We pull back again, and it's a pullback off the moving average. That is the same exact setup that I'm mentioning here, right, as we go. Another thing to keep an eye on here would be if we do end up getting that run lower. Right? If it does run lower here, I'm going to watch that trend line, try to get up above it and use it as support in this situation. At the same time, we oftentimes see as these markets accelerate going lower here and they run into these support levels, moving average comes over, bears try once, bears try twice, and we're buying into those stop losses from there. We can almost always incorporate, right, that trend line on that one as well, right? So just be aware of that. If we do start seeing this thing accelerate to the downside, I definitely don't think that's a reversal just yet, but I will be looking for, just because momentum will be a little bit stronger for the bears, it's a good idea to wait for those bears, try once, try twice. Then you know exactly where those stops are, and you can buy right into those stops. And again, keep in mind too, a lot of times that deep pullback will rip higher, shallow pullback, higher high, trap low. Remember that one? What's that called again? A two-try trap pattern. Again, it starts off with that strong move, right? Shallow pullback there. So that is a great scenario to keep your eyes on for tomorrow. Again, we call these nested failure patterns, right? Nested failures. It's a two-try failure. And then, of course, we get your two-try trap right before we retest those highs. And again, all these patterns, guys, all these patterns, you'll learn about failures, pullbacks, traps inside that free trading course I mentioned earlier. Click the information icon in the upper right-hand corner to get your hands on it, or come out and join me tomorrow and every morning, 8 o'clock Eastern Time as a member. I'll put all the information for you in the description of the YouTube video. Now, how do we reverse? What's a reversal look like? There's a couple options here right now for reversal. One would be if the market just bloodbaths. Right? If this thing collapses here, this ain't a bull market any longer. I'll mark up that low, I'll mark up that high, be looking to sell off the high of that new hidden channel. We may also see if it happens to collapse, we know we've got that $12 area, like I mentioned earlier. If it collapses, watch out now, right? If it really takes a bath here, watch out for that shallow pullback, lower low, trap high. What do we call that? We call that a two-try trap pattern. Almost always going to find that coming in off some additional level of resistance. So keep your eyes open for that as well. Those are certainly going to be options for us here, right, on the sell side, waiting for that full-blown reversal. Now, we may also see it kind of come down, stall out, right, and then make that move lower. So that's where you go in, grab that new hidden channel, right, and grab the short off the high there. Again, you really can't trust it until you get that next strong leg going lower. So now we get a really good plan there on the crude oil. How am I doing so far? What are we, 35, 36 minutes here into the video right now? If you're still watching this video, you are the person I work so hard for. I know a lot of people can't stomach the idea of paying attention for more than 20 minutes. So if you're still here with me right now, hit that thumbs up button for me. Hashtag 1%er in the comment section. It really means a lot to me that you are part of that dedicated group here with me every evening on this nightly newsletter. Let's wrap this thing up here with I was gonna say the dog of the evening tonight. No, I shouldn't say that. Dogs have a lot more action than his gold did today. Over on the gold futures, wrapping things up here on the yellow metal. It's a range. It's a range. We definitely know the market is still inside of that range. I'll tell you right now, though, I don't think I've ever seen an FOMC announcement with this little reaction on the gold. What does that tell us? It really tells us, I think, that people are waiting to see how the rest of these markets are going to respond right now, and whether or not gold is really going to be an effective hedge, right? I mean, we've all kind of read the books. We've all been told, right? Gold is the shelter market, right? Gold is the umbrella when it's pouring rain outside. Gold is that safety, that run to safety. But clearly, right now, we got that spike up because of, obviously, anytime the FOMC talks, gold's going to spike up a little bit because gold is that kind of hedge against inflation. And usually the FOMC talks about printing more money. So gold kind of instinctively always rises when the S&P talks, just like oil always rises whenever OPEC opens his or her mouth. So we definitely know why they jumped. It's a range market. It's obvious right now that gold is struggling to latch on to any real direction. We know we have. It's a bear move down into that trading range. But I'll tell you, when you see a spike up like this, you've got to give those bulls the benefit of the doubt, because like I mentioned on the S&P, when you spike, when you see any strong move in one direction, you're almost always going to get another leg in the same direction. So we know we're range bound right now on the yellow metal. We know that range bound markets, what do they tell us? They tell us to stay away from the middle, right? That's no trade zone. They tell me to use that range to find my sell zones above so I can sell high. And they tell me to find my buy zones down below so I can, of course, buy low. Now, there is a bit of a bear bias to this, but I mean, for the last 2 days, though, we've been sitting here sideways. So there really isn't a lot of bearish momentum left in this market. I would say right now the bulls have that slight edge for really two reasons. One, of course, is what I described earlier, that strong spike higher here. You just simply cannot call this not a little bit more bullish than bearish when you see a spike like that. But the big thing I see in this chart is the lack of rotation. That lack of rotation. Remember, when you've got these expanding triangles like this, gold loves these triangles, right? They'll go from top to bottom, bottom to top to bottom, right? And they should have gone back down to that low. What happened? Yeah, what happened? That is a very big clue. It's not what happened, it's what didn't happen. It didn't finish off its rotation. This leads me to believe now, when we don't finish off the rotation there, followed by that big spike here, there's obviously quite a bit of bullishness in this market. And so that's going to play into our plan here to trade this stuff tomorrow. So buy low, sell high. We definitely expect to see a lot more personality tomorrow on the gold than we did today. Again, I think people are waiting on to see how they would respond to the FOMC. The first thing I'm looking for, though, is how do we trade a breakout? Breakouts are, when I see a market, lack of rotation, strong spike higher, what's a breakout look like? First of all, a 1, 2, 3 breakout. If I hold that pullback off the moving average, I can mark up now that high, mark up that low, and I can buy the pullback off of that low. Again, a 1, 2, 3 breakout into hidden channel pullback. Again, don't confuse it though. It's not enough to get a strong move higher and get a breakout. We've seen lots of examples of strong moves. They look very convincing. This is why breakouts are so difficult. Breakouts look very convincing, and of course all the indicators are firing off, but most breakouts are going to fail. That's why I don't recommend buying those breakout pullbacks. In fact, whenever somebody asks me, how do you trade breakouts? I say I don't. Well, I do, but I fade the breakouts, right? I wait for the market to go below the moving average and I buy it back up. I wait for the market to go above the moving average and we sell it back down again. We fade those breakouts, right? We don't trade the breakouts. Another thing I'm watching for tomorrow would be if the market continues running. Let's say we don't get the pullback, right? Let's say it keeps going higher here. It runs higher, we pull back, but on the pullback now, it's a very shallow pullback. If it touches the moving average, it barely touches. It looks like this, right? But higher, up here, right? higher up on the chart here, right? It'll look like that. It'll go right up. It'll just come back and just barely kiss that moving average, right? It's not going to overlap the moving average. So if you see that again, I would want that one higher on this example. But again, watch that shallow pullback, that higher high. Once you see that shallow pullback and higher high, now you know, mark that low and that trap, right? That trap is really going to be a very reliable setup at that point. And where's my target at that point? My target now is, as you mentioned in last night's newsletter, it's kind of the tale of two ranges, right? We got that range waiting up overhead, and that's where those buyers want to get to. So it's going to be that 1, 2, 3 breakout into that hidden channel pullback, or it's going to be that strong move up, shallow pullback, higher high, and that 2 try trap, right? Two of my favorite breakout patterns, or really any pattern that shows me some strength coming out of that trading range. So we got those two kind of breakout patterns there, right, as we go. Next thing here, how do we sell this? How do we sell this market off the high? Again, I got a lot of confirmation of the optimism in this gold market, the lack of rotation, the strong spike higher here. The only way I would want to sell this is if I could get what's called a nested failure. So as we pull back to that moving average now, I'm watching the buyers try once, I'm watching the buyers try twice, and once I see those bulls in this case, and I know I want to get aggressive on this, I like to get aggressive on this, but there's too much evidence on the chart right now that being an aggressive seller might not be in my best interest here, right? Because of what we discussed earlier on here. So once I've got those buyers trying twice though, now I know where stops are. And as long as I can do that outside of the range, I'm good to go back down into that trading range. Now, speaking of which, maybe we drop back in and we go 1 and we go 2. Keep your eyes on those traps. This is another way to use a kind of a nested failure here. Again, we're expecting to see some buyers here, right? We're expecting some buyers because of the evidence we've already talked about. If I see those buyers as we go lower now, watch that trap high up there. That's more like a crown reversal pattern. If you're watching earlier on in the video, we talked about the crown reversals. It's basically the buyers trying once, the buyers trying twice, right? We know they're all in now. There's no more buyers left to spoil the fun for the sellers, and we got to get in above the top of that range, right? Remember, that's the key. You don't want to be trading inside the range. What will happen is you go back in, the market pokes its head higher, and people will come back in and sell it again, right? Well, that's a great option here if it sinks back in. Speaking of sinking back in, right? We may go back right into that range, start running sideways again. Honestly, that will be the easiest scenario because now we're back inside the range. We wait for the bears to run out of bullets. We wait for the pop up. Okay, at this point now momentum is back to neutral again. And now we wait for, you got it, that breakout pullback, and we sell into those stop losses. It's your straight up failure pattern up above the high of that range. Keep in mind too, that could easily jump off the moving average. And what is that? 1, 2, 3 reversal, 1, 2, 3 breakout. We mark up that low and we buy off the low of that hidden channel, right? You get the point, right? We're talking about these. It's a lot of the same setups, but just applied differently. Like a master chef would use different ingredients in different ways for different dishes, right? That's exactly how a trader does it as well. Now, if we really tumble, strong move down, pull back to the moving average, strong move off the EMA, right? Really strong here. It'll look like this, but they'll hold it, right? Strong move down, pull back, run, right? You can't trust strong moves in ranges. You got to get proof, or else you're going to get your head taken off there and lose a bunch of money. So once I have that 1, 2, 3, I can mark up that low, I can mark up that high, and I can be relatively confident, right, of selling below that range as long as I've got that momentum. If I don't have that momentum though, right, if I don't have it, if we run lower here, we chop around here, as I go lower, can I buy this? You definitely can, right? I definitely can. I can look for that seller failure, right, as we go back up into that range. Or if the market really tumbles and we don't even spend any time in that range, what do I need now? Momentum's a problem, so I want that nested 1, 2, and back up from there. Why do I use a different pattern there? Momentum, right? One of them goes through the range. When it goes through the range, right, you wait for one, you wait for two, and go from there, right? But if it just stalls out and goes inside the range and chills out for a while there, right, then we go down. Momentum isn't a big concern anymore. We can, of course, buy into those stop losses. All right, guys. We got a lot to cover here. Got a lot covered here in this video. Tomorrow, the true test. Tomorrow, we'll apply this stuff together, right, in real time on our charts with all of our clients. I would love to see you there, right there with me, and every morning. Again, as I mentioned earlier, I'll put all the membership information for you down in the description of the YouTube video. If you're on the blog right now, it's Sideways Markets. I'll put a big blue button for you to get registered for tomorrow morning's trading session. Again, you got to be a member to get involved. All the membership information in the description of the video. Don't forget, you can always call me here in the office. Don't let my ugly mug, right, scare you away. You can always call me here in the office. I'm always here 24/7. I'm in lockdown, so I can't leave here in Los Angeles. And it's looking like right now, between you, me, and the rest of YouTube, I might be in lockdown until the end of the year this year, the way they're talking about here in LA County. But I'll leave that everybody else to discuss. Don't forget to hit that live support tool, right? That may also be an easy way for you to reach out and get more information. And as always, guys, don't forget, if membership isn't quite right for you, at the very least, grab the free course as part of our free trial. Learn the strategy, learn the setups, and come back and join me again tomorrow night on the next edition of our nightly newsletter. Boy, what a great day today. Hope you guys did well out there. Great job getting through FOMC tomorrow. Got a lot to look forward to tomorrow in the trade room. Hope I see you there with me. If I don't, though, come back and see us tomorrow night. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.